Welcome back. Up next, we have Forum Daily's Market Update with Catherine Murray. Catherine is the host of the Buck Stops Here, and she joins us now. Take it away, Catherine.
Thanks, Seema. Hello, everyone, and welcome to your weekly market recap. I am Catherine Murray. Well, we are seeing markets trade mostly lower today, but that is after seeing some nice gains recently. We are, however, seeing the price of crude oil trade down by about 4.2% off the worst levels of the day. This as the White House plans to release 1 million barrels per day for the next 6 months from the SPR, or the Strategic Petroleum Reserve. This is actually the third time that that's happened in the past 6 months. And in total, we'll see about 180 million barrels released from the SPR, the largest in history. But as you can see, even though WTI is trading lower today, we're still trading near the highest range we've seen in a decade. So obviously the market is still believing that the demand far outstrips the supply from the SPR. And we're also recognizing as well that OPEC Plus only agreed to release an additional 432,000 barrels per day. So again, demand outstripping supply. Interestingly as well, we've heard from Putin that today he signed a decree that gas exports must be paid in rubles. This ahead of another supposed peace talks between Russia and Ukraine tomorrow. Also importantly as well, and obviously there's skepticism in the market in terms of how that will play out, we did hear from President Zelensky saying that Ukrainian forces are preparing for new Russian attacks in the southeast region. Stepping back, when we think about the broader equity markets and market narrative, including fixed income, really there are a number of bearish talking points that I want to hit on today. One is the FOMC minutes. They'll be released next Wednesday. There will be absolutely extra focus on the details of the pace of the balance sheet runoff. In other words, taking money out of the system. There's also, of course, a resurgence of COVID cases in the international markets that's weighing on global growth concerns. We also have elevated inflation numbers as oil hovers near its highest levels, I mentioned, in 10 years. So no change there. There's also, of course, concerns surrounding the yield curve inversion. This is another bearish talking point, and whether or not that is signaling there is a recession to come also, of course, calls into question whether or not the U.S. Federal Reserve will make a policy mistake by raising rates too fast and pulling money out of the system too fast. Lastly, on the concern side for the market movements will be the first quarter earnings season, which kicks off essentially this coming week. So there are some continued concerns that are perhaps weighing on the market movement right now. On the U.S. economic front, PCE, personal consumption expenditure, was in line with consensus. It is an inflation reading. It was up 6.4% year over year. However, continued jobless claims hit a 1969 low. So there is still certainly a lot of strength in the labor market. In terms of stocks, there is, as I briefly mentioned, concerns surrounding the consumer feeling the pain of inflation. And you did see Tempur Sealy, TPX is the ticker there, have a negative first quarter pre-announcement, flagging geopolitical concerns and a decrease in consumer confidence, and of course, new COVID outbreaks on the international front. Away from that, when we think about the market, Canada, gas prices obviously front and center, as the carbon tax increase is set to take place tomorrow. Of course, the Conservatives are against this hike. We've seen Alberta dropping the gas tax, sales tax. Economic data here in Canada, GDP grew 0.2% in January. Significant strength in construction, that was up by 2.8%. Wholesale trade up 3.1%. All of these numbers, which are on the positive side, might put some pressure on the Bank of Canada to raise rates faster than expected. That decision from the BOC will take place on April the 13th. So be aware that that is coming to a movie theater near you. Away from that, when we think about the BOC and the tone that they might take, housing affordability is certainly a concern for Canadians. RBC is out with a report saying housing affordability is the worst we've seen in 31 years. The TSX, little change right now. Just a couple of stocks mentioned. CCO, which is Cameco, is a uranium company that was upgraded to an outperformer over BMO, Bank of Montreal. RBC is buying a very prominent UK money manager for $2.6 billion, so adding there. And Magna resumed coverage at RBC with an overweight position. Nima, a lot going on, a lot to wait for. FOMC minutes will be front and center. The BOC decision will be front and center. And first quarter earnings and guidance. Will these companies feel the pressure to guide lower? Nima, I'll leave it there. Back to you.
Lots to keep our eyes on, Catherine. Thanks for that. You can get more analysis and news on the markets with Catherine Murray on The Buck Stops Here. All right, stay with us. We'll have news on the Ukraine war, energy prices, and inflation up next. Stay with us.